Hello. Hi, Henley. How are you? I hope everybody's doing okay. It's a great day out there. It's February 23rd. It's morning in the US, 8 a.m. And good day. I hope it's a wonderful day wherever you are in this beautiful world. My name is Ed Ponsi. I'm here on behalf of FX Street. And let's get started. Today, we're going to update our trade on Aussie yen. This trade's been going for a few days, close to a week now, actually. And we're going to update it. And so what we did is we entered on the moving average. The stop is half of the ATR. And then every day we update the stop. So we updated it once. We moved the stop up from 86.03 to 86.09. And then on this day, we need to update the stop again. So we're going to need our ATR. And this is great. This is a little exercise we can do, and this is going to be very educational for us. Now the ATR is dropping. Okay, so we already know the stop for this candle. Now we know that we have not been stopped out, correct? We know that we have not been stopped out because the stop always is under the moving average by half of the ATR. So if the price does not go beneath the moving average, we cannot be stopped out. So on this day, the moving average is 86.55. Do you see it there in blue? At the bottom of the box, 86.55. And the ATR on that day is 0.7797. Now what that means is 78.97 pips per day. Round that up to 78 pips per day. So half of 78 is 39 pips per day. Right? So we take the moving average, which is 86.55, take 55 minus 39, and the stop becomes 86.16. 86.16. By the way, I'm feeling fine, Henley. Thank you for asking. I feel a little bit better every day, and I'm hoping that this continues. So, right, we can see how the stop is progressing. We only move the stop higher. We never move it lower. This is true on any trade. Right? When we're long, we can only move our stop higher. We can never move it lower. And when we're short, we can only move the stop lower. We can never move it higher. Now, when we move that stop to 86.16, it's still potential for a loss. If we entered at 86.43, we could still lose. But the next day, the candle closes, and we are still not stopped out. So now we'll repeat this procedure. On this day, the moving average is 7 pips higher. I see the moving average at 86.62. 86.62. Do you see it there? The bottom blue number in that box where it says average exponential. 86.62. So that moving average continues to rise. And the ATR, you see the bottom number in the box. As I lower the box down, ATR says 78.06. That means that Aussie yen is moving 78 pips per day. Half of 78 remains 39. Right? So now 62 minus 39 equals 23. On this day, the stop moves up to 86.23. So all we're doing is moving the stop once per day. Very simple, very easy. Takes about 15 seconds per day. And there's still a potential loss here, but the potential loss is now only 20 pips from 43 to 23. Meanwhile, right now, if we bought this at 43, right now it trades at 87.12, so we're up 60 pips. We could lose 20, but we're up by 60. We were up more. I'm sorry, we're up by 70, not 60. And we were up by more. Okay, so now I'm not going to calculate the stop for this candle because this candle is open. And as this candle price moves, the moving average will move with it. If the price moves up, it pulls the moving average up. If the price moves down, it drags the moving average lower. And of course, this changes the equation. So I wait for the candle to close. This is a daily chart. So this candle will close in 8 hours and 50 minutes from now. So it's a long time to wait. 8 hours and 50 minutes from now. And this is also the quietest time of day. If you think about it, 8 hours and 50 minutes from now, it'll be 5 p.m. in New York. That's the time this candle closes. It'll be 5 p.m. in New York, which is a very, very quiet time of day. When it's 5 p.m. in New York, all the New York traders are going home. The stock market in the U.S. is closed. When it's 5 p.m. in New York, it's 10 p.m. in London. All the UK traders are going to bed. When it's 5 p.m. in New York, it's 11 o'clock, 12 o'clock in the capitals of Europe, and all the European traders are going to bed. And when it's 5 p.m. in New York, it's 5 a.m. in Tokyo, and all the Asian traders are still, they're still waking up. And so it's probably the quietest time of day. And therefore, I'm moving my stop at a time. I don't have to be sitting at my computer exactly at 5 p.m. because it's the quietest time of the day. Nothing is moving. So if I'm not moving my stop at exactly 5 p.m., it really doesn't matter. If I move it at 5:15, 5:30, 6 o'clock, it doesn't make much difference. The prices are not going to change. Very rarely does it make any difference. Okay, so that's how this strategy works. Okay, and so we continue to move the stop in this fashion until the price breaks through the moving average and stops us out. And it sure seems as if there is support on the 20-day here and here. And on the last two sessions, the price actually fell, came close to the 20-day, and bounced up. So somebody seems to be buying the dips, and this is the whole strategy here, is to buy the dips. In other words, if we're buying on the moving average, it's not possible to buy the highs. Some poor person bought it way up here. Okay, but that can't if you're buying at the 20 moving average or even at the 10 moving average, it's impossible to buy the high. We don't want to buy it at the high point. We don't want to short it at the low point. And if we're buying it on a moving average, like the 10-day or the 20-day, then it's impossible to buy the high. It's impossible to short it at the low. And those are the things that hurt the most as a trader, is to buy it at the high or to short it at the low. Those are the things we really don't want to do. Okay? All right. So we're going to keep this thing going. I'm going to be here with you not tomorrow. I will be back with you again later today, and I'm going to do one session on Monday and one session on Tuesday. So tune in with me on Monday and Tuesday to see how this plays out. Okay, we'll keep this going. If we get stopped out, we'll get stopped out. If not, we're going to continue to raise the stop. So let's see how it plays. All right, next topic. Let's take a look at the dollar. You know, I drew this head and shoulders, and the dollar is just not cooperating. It happens, right? Markets don't always do what you think they're going to do. And look, it could still happen. But I don't know if that's going to become, it still looks like it could become a head and shoulders, but who can say? Right now, the most interesting thing about the dollar today is that the new Treasury Secretary of the U.S., he's making the rounds on all the television channels, and he says we're not going to do anything on taxes until August. Well, this was very, very different from what they were saying just a week ago, right? A week ago, they were saying we're going to have tax reform in 2 or 3 weeks. August is like 4 months away. And it's very disappointing, I think, for a lot of businesses. You see, a lot of businesses, I think, are anticipating tax reform, and I think that's what you're seeing on this chart. Right? This is the election, and this is today. And we're bidding higher. It's going to go a little bit higher at the open today. But I have to wonder, since now they're saying tax reform is not going to be in 2 weeks, it's going to be in 4 months. What are they going to say 4 months from now? Are they going to say it's going to be in 2 years? If this tax reform doesn't come, how do you justify this move in the stock market? The answer is you can't. And that could have a profound effect on currencies. The one specifically I'm thinking of is the yen. And I wonder if the yen, maybe the currency traders are smarter than the stock traders. Because the yen chart looks nothing like the S&P chart. It did look just like the S&P chart into December, and then it totally changed direction. And I have to wonder, you see, this is to me what the stock market should look like once they realize they're not going to get their little present. They're not getting their tax reform. I don't know if they've figured this out yet. Because really, he just went on television and said it a half hour ago. And they've been running stocks for 3 months based on tax reform and deregulation. So I really now am starting to think that this is precarious. And that if this comes down, then dollar yen really gets a little bit scary. But what do I know? It's just my interpretation of the fundamentals. I could be completely wrong. I'm not placing a trade on it yet, but watch this area here. See this? I'm just going to keep an eye on this. Just under 112. You see that? And that. Okay? So I'm not going to guess. because it's not a guessing game. To me, trading is not about prediction. It's about reaction. I am not going to sit here and predict that dollar yen is going to break because of what just happened this morning. I do think it's more likely to break because of what happened this morning. But I'm not going to gamble on it. But if you can get dollar yen under this line, here's what I know. I know that if dollar yen gets under that dotted line, then I know that every single person who bought it up here is losing money. Unless they already got out, they're losing. And if they're losing, well, losing equals pain. Pain is no fun. Right? Pain is no fun, right? And pain is a strong motivator. So I will be looking to short this here. Somewhere in that area. And don't be surprised if that breaks, if the stock market starts breaking with it. Because if you begin to realize, right now, I mean, the market's on a high. It's at an all-time high, but when I say it's on a high, I mean, it's on a high in the sense that they believe that they're going to get this amazing gift in the form of tax cuts and credits and tax reform. And if they don't get it, this is going to go. And I think I'm shocked that the futures are up right now, based on the news this morning. Frankly, I'm very surprised that the futures are still up. This to me looks like a good place to sell short. Of course, if that happens, we'll probably get stopped out of our Aussie yen trade. C'est la vie.
Que sera, sera, right? If it happens, it happens. Whatever will be, as they say.
Right. Keep your eye on that, and keep your eye on stocks too. This market's going up, up, up based on something that they're not going to get, or they're not going to get it when they think they're going to get it.
I mean, look.
My taxes aren't due until April 15th, and I'm sitting here thinking, I'm going to sit here and wait.
Why would I file my taxes now when I'm going to have a lower tax rate on April 15th?
You have no idea how disappointed I am.
Wait till next year.
Well, every company in the U.S. is going to go through the same thing. It's precarious. Let's look elsewhere, gang. Now, I told you folks also that I wasn't playing the pound because of the drama in the House of Lords. It turns out the drama wasn't all that dramatic. There were no big gaps. So I stayed away from it for a while. But it turned out to be not such a big deal. And as I look at it now, it does appear to be like look at the volatility. I want you to draw your attention to the volatility here in cable. Let's pull up the ATR. And look at the ATR, it's just draining out of this thing. 93 pips per day on cable is the lowest volatility we've seen since probably since 2015. Let me put a line on it. Yeah, since early 2016 this is the lowest volatility we've seen since way before Brexit. So volatility is just draining out of cable now. And I begin to think that we may be able to get, look how the price has just been trapped. Really between, it's in a fairly tight area, isn't it? Let's take it down to a 240 minute. I'm thinking low volatility breakout, a really different type of strategy that we haven't discussed very often on here. Look at this on the lower time frame. I've got it on the 4-hour here. Can you see the very clearly defined support and resistance here? As we go to the lower frame, it's really coiling into this, look, tighter and tighter and tighter, like it's going to pop. I could probably draw, let me draw that again. I'll draw that a little bit better for you. There's more than one way to draw it, obviously. But I think it's wound up pretty tight, isn't it? I bought Aussie yen last night at 86.80, but still struggling to reach 87.50, says Carlos. We moved our stop up on that one earlier in the session. Still keeping that under the 20-day exponential. I'm looking at this thinking, is this on the verge of a breakout out of this like super tight like coil here? Is this thing getting ready to pop? This whole House of Lords thing is a tempest in a teapot or whatever. It's not a big deal. But this is a really long consolidation. It's over a month. It's just been wrapped up tighter and tighter. Low volatility leads to high volatility, right? So when I see everybody crowding into this thing, and I'll show you the Bollinger Bands too, right? So see how the bands are like fairly tight. Like here they're wide. Look how wide they are. Look, they're getting tight. They're tight. They're tight. This thing wants, I don't know, this thing wants to break. It wants to go. Whenever I see like the ATR dropping and the bands are squeezing really tight and the range is getting tiny, I start to think, you see, it's a low volatility situation. And it looks like a buy to me. I don't know. It looks like it's breaking out the upper end here. I think I can do this with fairly low risk. Where are we right now? The high of the day is 98, 124.98. The lower band is 124. I could do this with a, it's not that tight. I mean, I could buy this above 125. Like I could buy this above the upper band with a stop under the lower band. Right? And I know that seems that's not really that tight. It's like a 100 pip stop. Maybe I could just or I could put the stop under the center of the band. Right? Now, where's the center of that band? 124.57. I don't know about that. That's a lot riskier. Where are we right now? Closing price is 94, 92. Sheesh. What was the high? Look at that morning star, evening star up here. Not a true evening star because there's no gap, but we forgive it because it's Forex. We just don't get very many gaps in Forex. It got to a high of 125.06. How about if we buy it above this high? What's this high right here? 125.22. I want to buy it at 125.10. So I'm going to buy it above this evening star. I'm calling it an evening star. I realize technically it's not because there's no gap. You should have a gap up and then a gap down to have an evening star. But because it's Forex, we know that we just don't get that many gaps. I want to put a stop way down here. Now, the lower band is 124.12. I want to put the stop all the way under 124. Watch this, 1.2390. Don't worry, just because it's a lot of pips doesn't mean it's a lot of risk. I never take a lot of risk. I'll size the trade smaller to deal with 120 pips. But I think this could make a big move. I think we could be looking at a big breakout here, potentially. Can I justify a stop that wide is the question. That could be the sticking point before I decide to enter this. I mean, this could be a target up here. That's close to 127. That's not even 2 to 1. So I can't really justify having the stop that wide. I mean, I could justify having, see, this target right here, I could justify having a target around this area. This is around 1.2675. And this target corresponds to this area here. It's actually under this area here. This is a resistance area. And there's a sharp drop here, which means there's really no resistance in here. So that target makes sense. That's 165. But that stop's too far away, so I can't use that stop. So instead of having that, I'm going to put my stop under the midline. The midline is 124.57. I'm going to go about 124.40. I just couldn't get away with putting a stop all the way down here. It just doesn't work on the risk reward, so I've got it here. I'm under the midline, but my stop is inside the bands. I've got a 60 pip stop and a 165 pip target. It's about 3.5 to 1. And this way I can also create, see that round number? I'll have a 1-to-1 target. That'll mean I'll have a target under that 1-to-1. This is actually, did I say 60? That's a 70 pip That's a 70 pip stop. So I'm doing this on the fly here, excuse me. It's a 70 pip stop. That means this is still not quite 3 to 1. Darn it. It's just not falling into place, gang. I'll tell you what. We're going to take a break here. Give me a chance to think this out, and we'll come back in a half hour, and I'll plug the numbers in, but I think I'm getting close to it. We'll come back in a half hour. We'll pick it up right where we left off, and at that point, or we'll ditch it, one or the other. Okay? It's either going to, I don't want to try to jam a round peg into a square hole. Okay? All right, I'll see you back here in 30 minutes. This is Ed Ponsi for FX Street. See you then.